The evolution of American capitalism. From slave agrarian capital to industrial empires, financial domination, and algorithmic power. American capitalism did not begin in Silicon Valley. It did not begin on Wall Street. It did not begin with hedge funds, venture capital, or artificial intelligence. It began with land, with forced labor, with legal structures designed to protect property over people. The history of American capitalism is not simply a story of economic development. It is the story of how power evolves, how it shifts forms, adapts to crises, absorbs opposition, and becomes increasingly abstract over time. From plantation slavery to industrial monopolies. From industrial monopolies to financial empires. From financial empires to digital platforms. And now, from digital platforms to algorithmic governance. At every stage, power becomes less visible, but more pervasive. This is not a moral condemnation nor a celebration. It is an analysis of structural transformation. And the deeper question beneath this evolution is simple. Who controls the system? And how does that control transform across time? American capitalism was born in the plantation economy. After independence from United Kingdom in 1776, the United States expanded aggressively westward. Land was the primary asset. But land alone does not generate profit. Labor does. And in the American South, labor was enslaved. The invention of the cotton gin by Eli Whitney in 1793 dramatically increased cotton productivity. Cotton became the backbone of American exports. By the mid-19th century, it accounted for over half of U.S. export value. Enslaved people were not merely exploited workers. They were legally classified as property, collateral for loans, assets on balance sheets, inheritable wealth. Southern plantation owners were among the wealthiest elites in the country. They dominated political institutions and influenced federal law. The infamous Three-Fifths Compromise embedded slave-based power directly into the Constitution. What emerges here is the first structural pattern. Economic power shapes political architecture. When Abraham Lincoln was elected in 1860 on an anti-slavery expansion platform, Southern elites perceived an existential threat, not just morally, but economically. The result was the American Civil War. The abolition of slavery destroyed the formal institution of forced labor. But it did not destroy elite land ownership. Sharecropping replaced chattel slavery. Debt replaced chains. Power did not disappear. It reorganized. After the Civil War, the United States industrialized at extraordinary speed. Railroads unified the national market. Steel, oil, and manufacturing transformed productivity. Urbanization accelerated. The key difference from the plantation era was scale. Industrial capitalism introduced corporate structures capable of operating across states. Figures like John D. Rockefeller and Andrew Carnegie built vertically integrated monopolies. Standard Oil controlled nearly 90% of U.S. oil refining at its peak. This era introduced a new institutional innovation, the modern corporation. Following legal interpretations such as Santa Clara County v. Southern Pacific Railroad, corporations increasingly acquired legal rights resembling those of individuals. Power became depersonalized. It was no longer the plantation owner dominating a region. It was a corporate entity spanning the nation. Labor unrest intensified. Strikes erupted. The state frequently intervened in favor of capital. Antitrust laws emerged under Theodore Roosevelt, but breaking monopolies often redistributed power without fundamentally dismantling elite wealth concentration. Industrial capitalism expanded productivity massively. But it also widened inequality and created structural instability. That instability would explode in 1929. The Wall Street crash of 1929 exposed the fragility of speculative excess. When asset prices detached from real production, the system collapsed. Under Franklin D. Roosevelt, the New Deal imposed regulation on banking, separated commercial and investment banking, and strengthened labor protections. For several decades, financial capital operated under tighter state oversight. But after World War II, The Bretton Woods Conference established the U.S. dollar as the anchor of global finance. This was a turning point. American capitalism no longer merely produced goods. It exported currency and financial infrastructure. In 1971, Richard Nixon ended the dollar's convertibility to gold. Money became fiat, backed by institutional trust rather than metal. Finance expanded rapidly. Deregulation under Ronald Reagan accelerated the growth of derivatives and complex financial instruments. By 2008, the financial sector had grown disproportionately large relative to productive industry. The collapse of Lehman Brothers triggered a global crisis. Banks were bailed out. Homeowners were not. This marked a critical shift. Financial institutions became too systemically important to fail. The state increasingly functioned as guarantor of capital markets. Power became more abstract, embedded in credit systems, monetary policy, and balance sheets. But even as finance dominated, another force was rising. The Internet commercialized. Companies like Amazon, Google, Facebook, and Apple built platform ecosystems. The core asset was no longer physical capital or financial leverage. It was data. The phrase, "data is the new oil," is imperfect but instructive. Oil powered industrial machinery. Data powers predictive algorithms. Platforms benefit from network effects. The more users they acquire, the more dominant they become. Unlike industrial monopolies, digital platforms operate at near zero marginal cost. Scaling is exponential. Globalization, reinforced by institutions like the World Trade Organization, allowed American tech firms to extract value globally while concentrating profits domestically. Digital capitalism monetized attention. Users became both consumers and unpaid data producers. Political influence expanded as well. Social media platforms began shaping public discourse, electoral outcomes, and information ecosystems. Capital no longer simply organized production. It organized perception. We are now entering a new phase. Artificial intelligence systems increasingly mediate economic and social decisions. Credit approval, hiring filters, content moderation, high-frequency trading, predictive policing. The defining shift is this. Capital no longer merely owns assets or platforms. It increasingly governs decision-making processes. AI models learn from aggregated human data and optimize for engagement, profit, efficiency. Financial markets rely on algorithmic trading. Cloud infrastructure concentrates computational power in a handful of firms. Power becomes infrastructural, invisible, embedded into systems we interact with daily. The risk is not simply inequality. It is opacity. When algorithms determine outcomes, accountability becomes diffused. Who is responsible for systemic bias? For market crashes triggered by automated trades? For informational manipulation amplified by recommendation engines? Algorithmic capitalism is less about coercion and more about prediction. It does not force behavior. It anticipates and nudges it. Across 5 phases, one structural pattern repeats. Crisis reorganization, greater abstraction of power. Slave labor collapsed, industrial monopolies emerged. Industrial monopolies destabilized, financial capital expanded. Financial excess triggered crisis, digital platforms rose. Digital platforms now evolve into algorithmic governance. At each stage, power becomes less tangible, less localized, more systemic. American capitalism is not static. It is adaptive. The future trajectory likely depends on one variable: whether democratic institutions can evolve at the same pace as capital concentration. If not, power will continue migrating upward and inward, from land to factories to banks to servers to code. And the more abstract it becomes, the harder it is to see and to challenge. The question is no longer whether capitalism will evolve. It will. The question is whether society will understand that evolution quickly enough to shape it.